This week's resin market is about as buyer friendly as we've seen in a long time, certainly this year. But a single midweek event is already changing the math for a good portion of the resin market here in North America. We're going to break down what happened, what it means for your pricing conversations right now, and exactly what you should be doing in every major resin category. So I'm Michael Workman. This is Resin Market Moves powered by ResinSmart. We did see polyethylene settle down for the month of June. Multiple sources reporting that it's down 15 cents a pound. Now, here's what's driving it. There's inventory coverage that's well above seasonal norms. There has been below average export activity despite the situation with the Iran conflict. The export market for polyethylene just hasn't been there this year. There's ample supply and feedstock costs have been lower with energy costs coming down despite the crude oil jump from last week. All that converging. Operating rates are above the 3-year average, but there really isn't any supply tightness in polyethylene to speak of. The pull-through demand just hasn't been there. There aren't any proposed July price increases. The suppliers continue to manage supply and aren't chasing price momentum in this type of market. There is a Gulf Coast polyethylene facility starting up here in the next few months that will be export focused. Shouldn't tighten the domestic market supply, but it reinforces that long-term supply picture in polyethylene is fairly available. There's no real catalyst on the horizon that's going to flip the market in the supplier's favor. The only thing that, could be the hurricane season if it hits the wrong part of the Gulf. Act in the market if you need to. Don't wait for suppliers to start a conversation if they have no incentive to start. Now, in polypropylene, we are continuing to see relief in that market. The market's down there, matching what we saw with PGP contract declines to the exact penny. And inventories are continuing to climb in that resin as well, above normal seasonal numbers, and production continues to outpace any demand. We did see spot PGP trades below 40 cents heading into this month. There are a couple of events to keep our eyes on, with a major turnaround at a northeastern refining complex, as well as a PDH unit that is undergoing maintenance in the Gulf Coast here. Production outages can temporarily tighten the feedstock availability, but this is not the same thing as a meaningful demand recovery, especially in the polypropylene markets. Demand hasn't recovered. If you wait for those production events to resolve before negotiating, you're going to give your supplier a talking point that the underlying market just doesn't support. If you need to be active in the polypropylene market, I would get your negotiations done now. Now, here's where this market gets a little complex. A significant part of the resin market, we're talking about polystyrene, ABS, polycarbonate, nylons, both 6 and 6,6, have cost structures that are tied directly to benzene. And heading into this week, the news for buyers in all 5 of those materials was genuinely in a pretty good spot. The July benzene contract had settled down, and then something happened. That something was the active nature of our president here, and the U.S. Iran ceasefire framework has really collapsed with unknown ramifications, but looking to be a severe uptick in the geopolitical supply risk in that region. Crude oil is bouncing back up, with benzene following it on the spot market significantly midweek. And it's not necessarily that the July benzene contracts that at risk, which is already settled. It's the August benzene contract, which gets set based on what is happening in the trades right now. So if the spot market stays elevated, August benzene is going to settle higher, and that's where suppliers get some legitimate cost coverage to hold their pricing positions, because benzene hasn't come down. That'll be the argument, right? With any sort of stickiness at that level. So the cost relief buyers expected that we were expecting in a lot of these categories to start manifesting here in July are likely to get pushed out a few months, depending on what we see here in the next few weeks. So unfortunately, the weak spot move is an early warning signal. Whether it holds through the settlement determines which of the 5 categories have an opportunity in July or downstream later in the year. In polystyrene, June was actually up. Benzene supported that, and July expected lower as that reverses. There is some structural news in that market, with Ineos Styrolution bringing offline their polystyrene facility in Illinois with specific citation of margin pressure and oversupply at low operating rates. And it's a significant size facility, and it tells you how poor the producer economics have been in the polystyrene family. A near-term supply remains adequate, but this is a rationalization happening in real time before our eyes. With ABS, June is flat. July is expected to be lower with, hopefully lower benzene costs, butadiene, ethylene pointing down. Some auto support is coming. We did see light vehicle sales increase to the highest number of the year in June, but not to enough of a level to meaningfully move the fundamentals in ABS. Although benzene is the wild card there, material availability is not going to be a concern. It's a cost story. And right now, it's in your favor. In polycarbonate, there was a flat month in June. July is expected to be stable to lower and has the same dynamics. Europe is still the highest price region, China the lowest, and there's just this backdrop of too much supply in the market. But benzene is a real risk and a wild card. In nylon 6,6, we actually saw the June market settle up with feedstock costs flowing through. July should reverse based on the settlements that are coming back down on the contract side. It's again a similar story with the benzene risk. There's some capacity rationalization happening, but doesn't change the near-term picture. In nylon 6, June is flat. The caprolactam story had moved lower with benzene, but now, we're keeping our eye on that on the way back up. There are going to be producers that are going to try to roll. June initiatives should be challenged. For those 5 resins, your pricing discussion in July, it's a July event is the important thing to stress, not an August event. If you're not having those conversations here in the next week, you may be missing a window. In PVC, we saw the market come down in June, a couple pennies with no July increases on the table. Demand has been tied to construction, and the new home sales numbers have been weak. Builder sentiment has been subdued, and continue elevated mortgage rates continue to weigh on the market. The inventories in this space, we saw grow in PVC as production outpaced demand. And with some seasonal summer construction, coming online and providing some support, it hasn't been enough to reverse the direction in pricing in this market. PET is lower in June, expected lower again in July, with both key feedstocks, paraxylene and PTA, under some pressure from crude oils coming back down. Although again, we'll have to keep our eye on the wild card of what's going to happen here in the near term with the conflict in Iran. There is peak summer bottle season that we're in here with some healthy demand and good order activity in this industry, but not enough to flip the pricing in the other direction. We're expecting July contracts to settle down. Hurricane risk is real here, though. Gulf Coast has the concentration of PET production, at least domestically, and certainly the feedstock assets. So continue to negotiate in that market and consider having coverage for your Q3 requirements to get out in front of any potential risk in the supply chain from the hurricane risk. So with all of that said, here's what I want you to take away for this week. 3 things. 1, the market is giving buyers a gift across a lot of these commodity resins. The data that is out there from a feedstock perspective, the absence of increased initiatives, the fact that there's not enough demand and supply is certainly in the market. Everything is pointing in the same direction. And this is about as clean of a setup as buyers are going to see. Number 2, for the benzene linked materials, the window is narrower than it looks. You have a July opportunity. Whether you have an August opportunity is going to depend on what shakes out with the conflict over the next few days and weeks and how crude oil resolves. Don't assume it will. Everything is unpredictable these days. And number 3, the buyers who are going to capture value in these types of markets they're not the ones that have better data. They're the ones who act when the data says to act. And the data is saying to act right now. If you want to know where your specific grades sit relative to what buyers are paying in the actual market, that's exactly what ResinSmart was built to do. Reach out, and we're here to help as we're in this every day. Subscribe for our weekly market intel report and follow us along on LinkedIn, and we'll see you next time. Have a great week.